Today, we're going to talk about Capital One's acquisition of Discover. And if you're a business owner and you accept Discover, this is going to have some major impacts on your costs and the way that you do business and the way Discover does business. So my name is Maria Sparagus. I'm the owner of Direct PayNet, and we work with thousands of 7- and 8-figure merchants to figure out their payment challenges and so forth. And today I have Alex. Alex writes for Direct PayNet and helps me with a lot of the research and just kind of knowing things about the industry. And he has a couple of very interesting questions, and we're going to have a good chat about it. So thanks again, Alex, for joining me today. I think this is a really kind of hot topic. I think a lot of people don't realize the impact that this can have. So I'm excited to kind of explore this with you and give you my opinions and obviously listen to yours.
Yeah, I think it's a bigger deal than what it feels like if you're not really in the know in the payment industry. Because so you mentioned to me that there are two potential directions that this can go. So I kind of want to explore a little bit about that and how that affects businesses, because a lot of the time when businesses accept payments or offer payment methods at checkout, they have the four main credit cards. Yeah. Visa, MasterCard, AMEX, Discover. And there's not really a second thought about it. But now maybe you do have to think about it a little bit, because if it's linked directly to Capital One, maybe things will change where you have to now specify that you want to accept Capital One cards specifically, not just as a bank.
Yes. So, I mean, a couple of things about this news. It's relatively new. Like, we're still reading about it. It's been out, they've been talking about it for a while, and now like the acquisition is finalized. So we'll see how the rollout happens. In banking, things tend to take a little bit of time and rolling out and so forth. But, one thing that's going to happen, one major change for Discover is that you will now be able to just get a Discover account. So a lot of businesses don't understand this. And the reason I want to bring some clarity is because your fees as a business owner will change. It will get likely more expensive. It might be something that consumers want to adopt more now, and I'll explain why. But for example, you said Visa, MasterCard, Amex, and Discover are the main credit cards that you see mostly on checkout pages in the US, of course, and internationally as well. But in the US, those are the main ones. So right now, Amex, up until maybe a couple of years ago, if you wanted to accept Amex as a business, you had to directly go to Amex, apply, get a merchant account, and then we would load it into the gateway. But you would be dealing directly with Amex, getting a settlement from Amex, and whatever that case was. A couple of years back, they started a program called Opt Blue, which was if you're applying for a Visa and MasterCard merchant account, you can check off something called Opt Blue on the application, and then the processor that you're working with would expedite the application to Amex and be able to kind of do it all in one place. It's still different than Visa and MasterCard, meaning Visa and MasterCard go to your processor, you fill out an application, they approve or decline. All this Opt Blue program does is it allows you not to have to go directly to Amex and fill out another application and so forth. But the application process still goes through Amex, and they decide, whether they want to approve you or not. Most of the time they do approve you if you're approved for Visa and MasterCard, but it's just a formality. But, up until a couple of years ago, you wouldn't see as many, businesses accepting Amex online just because of that separate process and how annoying it was for them to do it. And, a lot of times people who have an Amex also have a Visa or a MasterCard. So it was like, whatever. A lot of online businesses just said, forget it. Now, by Capital One acquiring Discover, they're talking about doing the exact same thing, being able to acquire merchants directly, being able to issue cards directly. So kind of becoming their own branch, kind of their own Amex, call it, not having to go through a processor in order to accept Visa, MasterCard. So like if you're a business and you want to accept Visa, MasterCard, you have to go through a processor. Like you can't contact Visa USA. But on Amex side, you can contact Amex USA and get yourself an account. Now, what happened with that is that the fees are a lot higher for Amex. So because they're a lot higher, and a lot of times businesses would not have Amex, not see a huge decline in sales, a lot of merchants stop. And now with Discover going kind of that route, Discover is a card that a lot of people like because it's a high rewards card. So as a business owner, you have to keep in mind that like taking off these extra cards might have an impact for you, but you will end up spending more to accept these cards than you are right now.
Yeah, I find this interesting because for on the consumer's perspective, Amex is like a country club. You know, people that have it love their Amex and they ask for it everywhere they go. If whatever business, whatever restaurant, whatever website, if they accept it, because they want to use this Amex.
Mm-hmm.
Um, Sometimes it's for the points, and but a lot of the time I think it's just because they like to show off that they have Amex, like they were approved, and your business was approved to accept it. So like you're in the same club. But the thing with Capital One and Discover is that Capital One is like what not quite the world's largest bank, but really close. So they have, it's not really a country club. You know, they're not limited with
Yeah.
their clientele. And Discover really isn't either. They actually, I believe they offer credit cards to people who are like have lower credit scores. There's a lower threshold.
Yeah.
So I find this interesting because now it seems like they either want to convert it to be more of a high end sort of credit card deal, as opposed to what both of those companies already offer today, which is like a bank account for anyone and a credit card for anyone.
I think I would disagree with that. Like what I think, and again, it's all speculation, just being in the credit card space. And I agree like that Amex has that country club. I like that analogy. Amex does feel like a country club. It's a little bit of a status symbol. You have an Amex Gold, an Amex Black, or whatever the case is. So people want to whip it out and show that they have that.
Yeah.
As you have to think of credit cards in two ways. There's the acquiring, which means for businesses to accept it. And then there's the issuing side, which is for customers to want to have it in their wallet. So, every different, every card network has a strategy. Like for Visa, they penetrated as much as they could the business market. So the more businesses accepted Visa, the more visibility people had it on their storefronts, on their
Hmm.
online stores, and so forth. So consumers wanted the Visa because they were like, well, everybody accepts it, so I should take it because everybody accepts it. So that was one strategy that Visa and MasterCard took. Amex took the strategy of status symbol, like you're special, so you should
Mm.
require businesses and like people to accept Amex if they want your business. Now they made it expensive for businesses to accept Amex. It's a higher, like it costs, 0.5%, if not more, depending on what business type to accept Amex. But you're getting an elite type of clientele and a clientele that has more money, so you may want to accept it. So the Amex went that route, and they tried to, get merchants to accept Amex by having a specific segment of, wealthier people and so forth. So you want to accept it to be able to attract those type of people to your store. So they went after the consumers to try to grow versus the businesses. Now, so far, Discover has they've been kind of piggybacking off MasterCard, off the rails of MasterCard. And if you accept MasterCard, you kind of automatically accepted Discover. I think that's going to change. Technology is going to change. And what's going to happen is I think they're going to stick to the lower end market, to not lower end, but meaning, people have credit problems or don't have as much money and so forth. I think they're going to stick to it. And they're going to invest heavily on like the points stuff, the cash back, like 2% and travel
Sure.
points and all that, just to try to attract as many consumers as possible. So businesses will start having to accept or be more open to, keeping Discover as an option on their store because, if you get 2% cash back and you spend a lot of money on your credit card, you want to use that credit card. You know what I mean?
Yeah, sure.
So I think that's going to be their growth strategy, is going to be really focusing on offering a lot of perks for people to want to have a Discover card. And then by default, business owners are going to just have to accept it because people are going to be asking to pay for it or wanting to pay for it, right? So it's an interesting strategy. I think that as consumers are doing a lot more of these like installment payments, subscriptions, buy now, pay laters, and relying a lot on their credit cards more and more and more and more. They want these huge perks. And what happens with these huge perks, if they're giving 2% cash back, well, as a business owner, guess what? You're paying for that. So you're paying a higher interchange fee. And I wouldn't be surprised that it's going to cost more to accept Discover in your store than it does now.
So, do you think that businesses will be kind of forced to accept Discover now? I mean, I'm under the impression from what you just said, from what you just explained, that they'll be forced to because so many people have a Capital One bank account. And if they're then, when they update their card, it will be a Discover card. No?
Yeah.
So
yeah, definitely. It will.
If millions of people have Capital One and they have to use Discover, then businesses all over the world are missing out on millions of potential customers. Like it's a huge share to just kind of ignore.
Well, like I said, right now, if you're accepting MasterCard, then you're accepting Discover because we usually tag it on. It works with the MasterCard network. I think Capital One is going to kind of change that and have their own platform and so forth. I think not accepting it is going to be a big problem for a lot of business owners. I think I would even say if it's a business to consumer type product, anything like under a couple $100, I think you're going to have more success accepting Discover than Amex. Like meaning it'll have less of an impact for you to remove Amex and keep Discover. Now, a lot of people say, well, shouldn't I just accept all of them? Yes, you should. But at the same time, costs are important, and credit card costs, especially for Amex, they could be prohibitive for some businesses, because they do charge a lot more than the other cards. And so now if you add Discover also charging more, you may want to say, you know what, I'll do Discover. I won't do Amex or whatever the case is, or be selective on who you offer these types of payments for. But yeah, I mean, I don't think that removing Discover is going to be a big option for businesses. I think it'll hurt them because Capital One has such a huge footprint.
So businesses can see what bank customers are paying from, right? So they can see that this came from a Capital One account.
Yes. No? Well, they'll see Discover, right? So like you can't see.
Not in the future. I mean now.
Right now, yes. I mean, you see Discover. You won't see Capital One. Like if you're a merchant, you get your statement. I mean, you can get granular and download your transactions and then sort them by credit card number and then kind of look through the BIN numbers, which is the first 6 digits of the card, to see which cards are coming from which banks. Long answer there, but there is a way to do it. But if you're just getting your statement, you're looking at it and you're trying to figure out, you'll just get the breakdown of Visa, Amex, MasterCard, Discover, any other cards you accept. So you'll be able to tell how big your market share is for Discover. It probably isn't very big, but.
Well, I'm wondering more on the market share, the market for Capital One accounts for businesses, from customers using a Capital One account so they can compare both and maybe from that decide just to not offer Discover at checkout at all and not worry about it because maybe there are so few of their customers that use Capital One. But like you said, I guess it might be too granular for people to really want to get into.
It is. And it's going to, the landscape's going to change because right now, if you're, like I said, if you're accepting MasterCard, you're likely accepting Discover unless you've specifically said, I don't want Discover, which I don't know why you would. But when we're doing a merchant account application, it's just automatic. If you accept MasterCard, you're going to accept Discover. So you likely have just the data of who uses Discover on your store through your month-end statement. But I think it's going to change because I think Capital One, by making this acquisition, is going to change the rules of the game. They're going to change what they charge for interchange. They're going to, maybe what I think is heavily invest, like I said, in the rewards programs, making it more enticing for customers, which then is going to roll down to more cost to businesses. And almost also force them to accept it because people will want to use it. So, I think if you don't accept it now, or if you do accept it, whatever scenario it is, it's not going to be applicable to what's going to happen once they start rolling out with the acquisition and things start moving ahead. And I think the payments market, as it grows and grows and grows, it's becoming more and more fragmented, which is wild to me. I thought, when I started Direct Payment in 2010, I thought things would consolidate way more. More people are going to just kind of get into one thing. But 15 years later, I'm seeing way more fragmentation and way more, advancements in fintech and people, creating new payment modes, splitted buy now, pay laters. ACH is starting to make a comeback. Installment payments are very big now for pretty much anything. In Europe, we're doing SEPA payments and all this kind of stuff.
Yeah, right.
Boletos down south still using things that I thought would be gone by now, but people are still using them, and there is more and more and more Zelle payments in the US are huge. It's becoming so fragmented that I think, unfortunately for businesses, it's a headache because now you're just splitting over all these different payment modes. But you gotta do it if you want to keep competing.
Sure. So yeah, this was actually really insightful because I don't think I realized the impact that this might have and how much thought businesses will have to make in the future once things really do start changing. Well, how soon do you think things will change?
I think
Because it was finalized.
Yeah, it's finalized, but it takes minimum a year for these things to happen.
Right.
Banks to roll out.
And there's nothing to do to prep, really.
Yeah, you just kind of wait it out and see. I'm sure right now, if you're accepting Discover, they're just going to have kind of like a rollover program. They're not going to make it too complicated, right? They don't want to do this. But the big topic of the conversation also that we have to think about is that business owners are just getting hammered with all these different payment modes, as I was saying earlier, and all the fees that come with these payment modes. So, buy now, pay laters, could be 5-10%, depending on who you're working with and what your business is, and now you're adding Discover that might increase their cost. So actually getting money from your customer is actually going to start costing a lot more for you as a business, which is scary. And as technology grows, you'd think the cost is going down, like, your iPhone and your computers and, forget about tariffs, like before the tariff spoke, but as technology advances, usually the cost of technology goes down. In the case of payments, people are adding more and more and more different payment modes and technology is building more, but it's actually now just costing a lot more. It's more expensive to get money from your customers. So if you charge $50, you might be getting 45 in your pocket. So businesses have to be ready for all these things, and they have to try to figure out how to manage the costs of accepting payments, especially, obviously if you're an online store, you have no choice. You have no cash payments that you can do.
Sure. Well, this was really insightful. Thank you for answering all of my questions.
Thanks, Alex. So yeah, guys, if you have any more questions about, all the different payment modes, what you should do on your card, should you change anything with Discover? As I said, don't change anything right now. Nothing's going to happen for the interim. But if you have any questions, pop them down below. Follow along for more insightful information. And thanks so much for listening.